I got tax returns that lenders hate, but my monthly cash flow is really pretty great. And I need so bad I'll get a bank statement loan, and I won't be so sad. Hello, this is J. Mike Perkins, and welcome to Music and Mortgage. And on this episode, bank statement loans. So what is a bank statement loan? Well, it's a type of loan program where the lender calculates your income differently compared to a standard normal mortgage. Instead of using income documents to calculate your income, with a bank statement loan, they don't look at your income documents. Instead, they get a whole bunch of bank statements. They average that out, and then they take a percentage of that and use that as your income. Let me give you a little more detail. When you apply for one of these loans, the lender is going to ask you for a bunch of bank statements, typically between 12 and 24 months, depending on the loan program. The lender then will review the bank statements and then average out the deposits. Then the average amount will be reduced by what's called an expense ratio, typically about 50%. And then the net amount is what will be used to qualify you for the loan. There are a few things to understand about these programs. They tend to have a higher rate. So if you qualified for something with a lower rate, you wouldn't use one of these programs. They also have higher down payment requirements, typically about 20%, but that can vary by the lender and the loan program. You've got to have good credit. And you have to remember that this is a non-standardized loan program. So guidelines can be different from lender to lender. And you need to also remember that what they're looking for to average are business income deposits. If you've got other kinds of deposits going in and out of your account, those may not be counted in that average. Among the things that could cause your bank statement loan to go bad are the following. If the lender believes you have irregular monthly deposits when they look at all of your bank statements. Now, this is, of course, somewhat subjective, but what they're looking for in a perfect world is someone who has consistency from month to month. If you've got unexplained large deposits, that can be a problem. If you've got excessive overdrafts and NSFs, once again, this is subjective, but if the lender thinks you have too many of these, that could get the loan declined. It's a problem if you have one account for both your personal items and your business items, and you are unable to separate those two to the satisfaction of the lender. And then, of course, finally, if you haven't been in business long enough to generate enough bank statements to meet the minimum requirements, that, of course, is a problem. Thank you very much for watching this video. If you're on YouTube, please help my channel by hitting like and subscribe. And now, more music. We all need help sometimes when the mortgage mountain gets too hard to climb. Reach out, I'll be there to help you on your way. All you've got to do is apply with me today.